You get to talk to a really wide range of customers. Are they concerned about the possibility of recession?
Customers, as you said, the people who manage money for a living are always worried about a recession. Our economists always have the recession probability of 15–20% at all times in the next 12 months because things can go wrong. But what's on people's minds obviously is obviously there's a major war going on in Ukraine and a major humanitarian issue that how the world will react to that, how that will back not just necessarily Russia exposure, which is limited for our company, but how it backs into the European economy and whether the European economy can continue to grow, and then how that affects the world economies. That's a worry. The inflation worry in the United States, and will the Fed get it right? Then the supply chain. We've been talking about this for a good while, but the supply chain is continuing to ebb and flow, and you saw some of that in China's announcements. That's more on the business side. But when you go to the consumers, it's not what they talk about. People survey them and they say, this is what I'm worried about. The question is, what are they doing? And in the month of March, they spent about, fairly stated, 13% more money out of their accounts and with their checks, with their Zelle, with their credit cards and debit cards than they did last March. When you think about April so far, it's up 18%. Those are numbers that square with a very strong economic activity level. And so what are consumers spending on? They're spending some more on fuel, but that's not, for the broad base of consumers, that's a more modest impact. For lower income, it has a higher impact, and that's one of the issues we have to deal with in society. But what they're spending on, travel, entertainment, restaurants, they're moving around again at levels they haven't as we got through another wave in the Omicron virus. And so there's another worry is what happens with the pandemic. So consumers are spending a lot more. But the most interesting part is we look in the accounts of our consumers and say, what do they have? And a consumer with $1,000 to $2,000 before the pandemic, average in their account, now has $7,000 in account. A consumer with $2,000 to $5,000, $3,000 to $5,000 before the pandemic now has $13,000 in their accounts. Cleared average balances. And so they have more money to spend, and they aren't borrowing on their lines. The credit card balance is still $20 billion off. All that says there's a lot of dry powder on the consumer side. So that's the tension. So that's the good news. I don't know what they say and worry about, but I can tell you on a given day, they're spending money and engaging in the economy.